broadcast is now starting. All attendees are in listen-only mode.
Hey, good afternoon, everybody. This is Dan Cook with Nadex. I want to take a quick, you know what? Before I do that, you'll probably want to see my screen. Excuse me if I do a few more of these over the years. I might get this whole process down. Okay, please let me know if you can hear me and see my screen. Just type it in the questions box. Awesome, perfect. Thank you all for the quick responses. We will get started then. Thanks for joining this afternoon. It's been a crazy week on a lot of levels. I think we can all agree. Historic week for the markets. I think a lot of us are probably exhausted. A lot of us in our personal lives, probably most of us, I would say, in our personal lives, been a bit disrupted. I'll apologize in advance if flipping screens. We're going to spend a lot of time in the platform today, but I am not in the office with my normal setup, so I'll apologize in advance if I get a little off flipping around. But really want to thank you for joining us. I think it's going to be a great webinar today. We're going to be looking at the current markets, the chaos of the current markets, which we'll touch on a bit more, and talk about some things specific to the markets, which we typically wait years to see. Nadex has had rules in place, and other exchanges have had rules in place. So I want to talk about those because I think it's really important in these markets. And I recognize a lot of the names. Actually, I even know a lot of the faces associated with the attendees here. About risk management and about risk in the markets, and how Nadex as a firm, we do our best to help mitigate unnecessary risk, but how by the structure of the contracts they do as well. So with that, I'm going to go ahead and get going here. No, real quick, just to let you know, I'm going to try to just take all the questions at the end, just so we can keep on track. And so if you do have a question, type it into the question box. I'm not ignoring you, just wanted to give you a heads up. Also, if I start to lose my voice, myself, like many of us, have been on calls pretty much around the clock this week. So I've been doing a lot of talking, and also a lot of typing, so my fingers are a bit sore. But let's get going then. All right, before we do though, I want to make sure everybody knows that trading involves risk. We're going to spend a lot of time talking about that. It's not appropriate for all. Even when it is appropriate, right? There are times where we may want to step away from the trade a little bit, and we'll talk more about that as well. You need to understand, right? Anytime you put money in a live market, you stand the chance of losing that money. Only ever use risk capital. I can't stress that enough, right? We want to use risk capital. We want to be accountable for ourselves, right? Markets change, things change. Understand the risks associated with it. And with that, today, and I'm not going to do a lot of slides. This I think is really an important time to walk through the markets, take a look. I'm also going to show you how I take a look at the markets from a technical perspective. But we've obviously had one of the most volatile periods really ever in the markets. I've been around a long, long time, back to the 90s, and this week has been absolutely stunning. From a pure volatility perspective, what was the high print on the VIX? Somewhere in the upper 80s. Unbelievable. And so we'll take a look at particularly this week, and I really want to focus on this week because I've never seen anything like it. It absolutely amazes me. We're going to break down some of the market moves, and I'm going to go into the charts. And I'm going to show you a way that I've been using to analyze the markets for, since 2004 is when I started with this technique. We're going to talk about the things that impact Nadex markets, again, because I think they're very important to understand. We're going to talk about futures limits and trading halts, when Nadex may or may not list contracts. And so with that, I'm actually going to hop right into the platform, all right? Because I like pictures a lot more than words. And let's just talk about the week. We're going to start out here actually talking about some of the concepts here at Nadex. Now, this is the week. This is just a 1 hour chart on the US 500. Is anybody, just out of curiosity, any futures traders there that are familiar with the overnight rules as well as the daytime rules on market halts? All right, then let's walk through that. Seems like we have a few questions regarding that. So let's actually just walk through this week. I'm going to expand it a little bit here so we can go. So this was the opening on Sunday night, right? We opened right about 2640, I believe it was. This is a 1 hour bar, but we'll zoom in closer on this later because this was actually only 15 minutes, right? This was 15 minutes of activity. Can everybody see my cursor all right? Cool. So, right, 15 minutes of activity. Markets opened. In 15 minutes, they went what was called limit down, right? Limit down is a condition where, for example, if a market in futures, and we're focusing on the futures markets here, currencies don't have the same structure as futures, but overnight, one of the first rules you'll need to know, and so you don't have to have it memorized. I'll show you what we're going to do. I'll walk through what we do in these situations. But in the futures market, so this is actually based on the E-mini S&P 500, there's a rule that says if they move 5% up or down, right, that's the maximum boundary they can move until 8:30 the next morning. So in this case, there was a lot of conviction in this move down. Our markets were not open on the indices at that point. They don't open until the morning. But in this case, if you see these ticks across here, or actually they're not even ticks, this was the lowest it could go. Now, it's not a halt. There's not a trading halt, and we'll describe what that is. For instance, if somebody wanted to try to trade up out of this, and we started seeing ticks up, right, you can trade up, but over this period, that's the lowest it can go. So that's the 5% overnight boundary. It's not a market halt, just a boundary. So again, it can tick up. Show an example of a shorter one here in a bit. Right, so we ticked. Now at 9:30 Eastern, 8:30 the next day, if the market hasn't moved, that's when we move to wider bands. In this case, the first band in the futures market is 7%. Now that produces a 15-minute halt to trading. So if it hits the 7%, you've got a 15-minute halt. But one thing I'm going to zoom in a little bit more, just because this is one of the most, I guess, kind of scariest, but yeah, most impressive one of the things I've seen. This was where we hit the 5% boundary, went limit down across here. Markets opened. The first print, so we were up here just about 25.60. The first print was down here about 24.40. Unbelievable, unprecedented move. Excuse me, first print was here, 2,500. Within a very short period of time, we went down to 24.50. So candle actually gapped down. The first print was about a 50-point move, which for a market that under normal conditions moves about 25, 30 points on a pretty active day, the first tick, the open of this candle, was 50 points lower. We can see it continued to move down, came back up and closed here. So that was the first issue of the 5 minute. Now I believe we actually had a halt. I'll zoom in on the charts in a bit because we had another halt. The very next day, right, we saw this big down move. Had an initial big down move, popped back up, came up. The very next day we went into what's called a limit up. This again was overnight. This was a 5% move from the open, right? We opened up right here on the next trading day for the futures. And right up in here, we ended up hitting a limit up. Now, it's rare in most markets under most conditions to see, one, a limit down, two, or a limit up, but then two, to have it directly followed by a limit up. And just the volatility here, it makes it very difficult, particularly if you're trading. If you're trying to trade the futures, I don't know, it looks like we have a few futures traders on here. Very tough times. It's tough to trade any market, right? So let's zoom back out. Came up, we had some more volatility. Boom, right back over here on Wednesday. Again, overnight hour, we hit that 5%. We came very close this week, so let me discuss the bands. So overnight until 9:30 Eastern, so from when futures open at 6 Eastern to 9:30 the next day, they've got 5% ranges. At 7%, during the day. So once 9:30 Eastern hits, at that point, if the market moves 7%, there's a 15-minute halt, right? Doesn't matter, can't tick up, can't tick down, it's an absolute halt. After 15 minutes, they reopen. The next band is 13%. This is a huge move. And we almost hit it. As a matter of fact, we were within a couple of points on the 13% earlier this week. Right? So we're walking through. And these are what are called limit up, limit down. Now there's one more, which thankfully we haven't hit, which is the 20%. That's the last band. Right? So if a market moves 20% from open over the day, that's what's called a lock limit. Trading is just halted for the day. It's kind of like, okay, everybody take a break and just go home. At that point, and throughout this, as a matter of fact, through here, and I want to discuss this because we had a few questions, like through here, if there is no underlying market, right? If there's no underlying market, we will often close our contracts. We do have certain rules. We give it a little bit of time because the market, right, can tick back up. It might hit that limit and then bounce back up, or if it hit an upper limit, it might bounce back down. But there are times where we may have to close contracts. And this is if there's an extended period of time in which we're at a limit up or limit down. Now, if we're at a lock limit, that's done for the day. Everything's going to close. We haven't come too close to that, not within a little over 7%, but that would be called a lock limit. And what we do in these situations, so for example, you might be saying, well, what if I have a settlement of a contract that it's limit up, limit down when it expires, right? Because typically we take, depending on the market, we take these multiples of ticks and we average them out, prevents manipulation, whatever, in those markets. But what if we don't have ticks, right? If we don't have ticks, in that case, we actually have to do what's called a manual settlement, and we'll go back to collect in the futures markets the previous 25 ticks, just as we would do the average. If you are, by the way, interested in the settlement calculations for these and how we do that, you can go to the FAQs on the Nadex page, and it breaks down. So we'll still do what we call our expiration value of the last 25 ticks. We do this to keep a fair, unbiased market. Now, at times also, we will just not list contracts. For example, if we were at a period, say right in here in the middle, where we were going to launch shorter term contracts, say 20-minute contracts, or even 2-hour contracts, there may be times where we don't list those. The reason being, right, we want to keep a fair, orderly market for all of our members. And so if we're in a state where there is no underlying market, it's possible you may look at your platform and there's just not a market. Now, currencies don't have these rules, so one of the nice things about having a multi-asset platform is that you can still find opportunities maybe over the currencies. Speaking of currencies, though, we do have a very popular 5-minute contract. Now, while there's not the limits in currencies, these markets have been going crazy, absolutely just chaotic, right? Sometimes that means that bid-offer spreads in the underlying market really widen out. They're not beneficial, particularly for such a short-term contract, to have a fair settlement. This will often happen, particularly on the open in the evening. Markets go crazy. So at 6 p.m. Eastern, currency markets are still trying to find their footing. They might go really wide. In that case, we may list some 5-minute contracts, but in other currency pairs, they may be too wide. We always do the best we can to list contracts, but we always have to balance that out with making sure that we have the most fair and orderly markets possible. Does this make sense? Kind of ran through that pretty quick, but I really wanted to hit on those points that if you're looking at the platform and all of a sudden the market is closed, and you look at a chart and it has lines, particularly like this up here, that could be the reason. Of course, and I'm going to throw up our customer service email and number towards the end here. But these are things that we really want people to understand, because this is very new for everyone. These are conditions no one's ever seen, not in the history of the U.S. markets. I have books, I've studied charts back to the 20s, and this is just unfathomable almost. And we've just gone through it. Bit of an exhausting week, but you know what? This also brings on opportunity. One great thing I'll say about Nadex, there's going to be risk. We're going to talk about risk and how you manage that here in a bit. But we didn't have a margin call all week. I don't think there's really another firm or even exchange that could actually make that claim. I can't say that with 100% certainty, but pretty close. No margin call. It's all about risk management. And so while these markets are volatile, right, you still have to manage your risk. You might want to trade smaller in these volatile markets, particularly if you're trading something like a touch bracket or a call spread, where maybe you're used to trading 10 contracts. You might want to scale down maybe to 5. Same thing, even with binary options, maybe you trade in a bit smaller size. So there's a lot of things we can do. So let's get into, that was just kind of a couple of the things, why we may not list contracts, why they may be halted for a bit, and happy to take some questions on that when we get here towards the end. If you have a pen and paper, I usually tell people not to write anything down, mostly because I don't have anything that important to say anyway. But, a lot of us are going to be spending a lot of time at home. We're probably going to have some time over the weekend. In most jurisdictions, I'm here in Chicago where Nadex is based. Can't really go out to eat right now. It's a very serious thing, and I endorse it. We need to do what's best for the public. But we're going to have a lot of time. So what I'm going to try to do today, which is hopefully useful, is walk you through some ways I can use the platform to do analysis. Right? I'm not going to give you any trade recommendations. I don't think you'd want them anyway. But this is a study I've been doing for, 16 years now. Taught to me by a mentor. It keeps it simple. But some key things, and I want you to write these down because I'm not going to give you the answer to these. But what I want you to do, I also always believe, as a mentor of mine told me, most people won't put in the work, but the only people that are successful are the ones that do. So I'm happy to show you examples. I'm going to give you the key terms that we'll be talking about today. So if you have a pen and paper handy or want to take notes, I can also type them in the chat box in a little bit. But here's the first one: multi-time frame analysis, trendline divergence, Fib or Fibonacci ratios, patterns. We'll talk about a few patterns. You can write them down as we get to them. And we're gonna keep it at that. And I'm gonna show you the tools on the Nadex platform that you can use. Some of them are drawing tools. I have to keep it simple. I'm very visual when we look at this. Multi-time frame analysis. Now, one thing I believe in as far as the markets, right? And there's a big argument about this. It has been for years. Do you have fundamental analysis? Do you do technical analysis? They're both tools, right? But the argument is, well, patterns don't exist. Technicals don't exist. We have books like A Random Walk Down Wall Street. We also have a book called A Non-Random Walk Down Wall Street, right? So big arguments. But I really enjoy physics. I love to study physics, and one of the things I've studied as it relates really to the markets, and there are so many things that overlap between nature, science, and the markets, but is chaos theory. Could we all agree that the markets have been pretty chaotic, right, this week? I would guess everybody's going to say yes. I mean, we've slammed up and down and all over the place. It's been crazy. But the reason why I like chaos theory is, one, it lends itself to multi-time frame analysis, and I'll talk about fractals. I'm not going to go too deep into this theory. But the basic premise is, right, we have chaos. Now, chaos would suggest randomness, right? It's all over the place, right? But chaos theory, and this is a physics theory, is basically takes the apparent randomness of chaotic systems and has discovered that there are underlying patterns and interconnectedness. There's repetition, and we'll talk about fractals. So even in chaos, amidst chaos, patterns appear. And that's something I've been studying for a long time. Please don't ask me to go too deep into physics. I will just bore everybody to sleep. But multi-time frame analysis. So we have our 1 hour chart up here, right? And this is just the week. This is the most interesting week I've ever seen. I think can safely say anyone's ever seen. So this is a 1 hour time frame. Now, even if you trade very short term, this is if you're trading a 5-minute binary or you're trading a 20-minute or 2 hour, a lot of times newer traders will get locked in to the chart that's only for the time frame they're trading. For example, if I'm trading maybe a 5-minute binary, I'm using a 1-minute chart. I'm always using a 1-minute chart. Or if I'm trading a 2-hour binary, maybe I'm using a 5-minute chart. You might be familiar with the expression, you can't see the forest for the trees. Perfectly applicable here, and this is why I believe in multi-time frame analysis. So a 5-minute chart is going to give you a lot of very short-term data. Basically, like if you're lost in a forest and you're spinning around, right, you're seeing all these trees. You're seeing all these trees, but they don't necessarily make a lot of sense. You're trying to find your way out. You're trying to navigate through the forest. That's the 5-minute. If you go out to an hour chart, think about that as having a map of the entire forest, right? You are here. You want to get here. You want to look on a chart on a longer time frame for key supports and resistance, right? You want that longer term view, even if you're trading very short term. And I'm going to walk through an example from this morning that I was looking at. I actually took a screenshot of it and then didn't copy it in. I wanted to show it and didn't copy it in. We'll walk through that though earlier. Sorry, I failed everybody on the call with that one. But just real quick, I'm going to bring up just a couple of drawing tools, because when we look at the markets lately, right, everybody would assume, well, geez, they've just been getting slaughtered. And they have, right? Previous weeks, like we're way down on most things. But if you look at just this week and the volatility in the intraday movements, we've actually stayed within a fair range. Let me just go to my drawing tools. I'm just going to throw on a couple of horizontal lines here, right? After we had the first drop on the open, we've kind of come down across the tops of these candles. Duplicate that line. And we've come down to right around, here. We've peaked below that, but we've been kind of actually sideways for the most part most of the week. We're down from the open, but all of this intra-week action has been up and down and all over the place, right? Now, if we just looked at a very short-term time frame, we may not know that, right? We may have thought, oh, man, I watched TV the other night and they said we're getting slaughtered. Not necessarily always the case. So what we do as technicians when we're using multiple time frame is we look for key levels of support and resistance. For example, let's say that we were coming down and we're farther along and we're coming down here. We might want to know, even on the short term, if we're trading a 2-hour, if we're running into where the market has stopped and reversed before, right? So that's the first leg. So I'm going to go to the 15-minute. I'm just going to get rid of these bars here. And again, I'm not going to spend hours going through this system. Again, what I want you to do is get an idea of this so that you can take some time, study it for yourself. Don't ever take another trader's word for it. First of all, we all trade differently, even if we traded the exact same methodology. I'll give you an example. Back in 2006, I was a trading coach, sat next to another trading coach. We were very actively trading FX markets, currencies. He was ultra short time frame. I was a bit longer time frame for the currency markets, meaning I held trades for anywhere between maybe 15 minutes to 2 hours. That would be kind of a long trade for me. But he was in and out in a matter of typically minutes, if not seconds. Now, I will clarify that oftentimes I was out in 2 minutes because I got stopped out. But we traded exactly the same from a methodology standpoint. One day we decided to say, hey, you know what? I'm going to try to trade your ultra short term. You can trade my short term. We'll see how we do. And we both just failed horribly. It wasn't right for us. So you always have to form your own. And because we all have different risk profiles, even if I taught you exactly how to do this over the next 6 weeks, it still may not work. That's why you have to work it out yourself. And I really stress that. So we put our drawings on for the daily. Let's go here now to a shorter time frame. I'm just going to go to the 15-minute. I really want to take a look, and we'll start talking about some of these things that shape up and how you can use some of these tools through there. So something you might want to write down is this is one of the indicators, and I'm actually going to show you how you put it on your chart. I already had it up there, so let me show you how you select the indicator, because I know we've got some newer people here. Indicator. This is the RSI. By the way, everything that I'm going to show you today, there's no guarantees, right? When we talk about the trade examples, let's also focus on and always keep in mind how we have to look at taking profit, and if we're wrong, how we get out. Okay, so I just put the RSI on there. If I wanted to edit the RSI, just click on that flag. I just have my period set to 14. That's the default, one I've used for years. So again, you just go to the indicators, select the indicator. Now there are a lot of different things. Don't just take my word for it, but always try it out. So the RSI, the way it's designed, and is anybody familiar with the RSI? I'll pause for a second, let them go. Right, Relative Strength Index. So what this is, this indicator, Relative Strength Index, is typically used for, and the way you'll also often see it taught, which there's nothing wrong with it, is an overbought, oversold type of indicator. For example, if a market goes above 70, as you can see right around here where it goes red, the market may be overbought. You might be looking for a sell opportunity. If it drops below 30, the market's oversold. You may be looking for a buying opportunity. I will warn you, it can stay overbought, oversold for an extended period of time. I rarely look at those levels. I do take into account just because I like to be mathematical about things. But we're going to take a look at trendline divergence. Is going to be the first thing. So we already looked at our hour chart. For this, there wasn't a lot on it. But so trendline divergence. So what I'm going to do, and you know what, I'm going to go to my highlighter here real quick if I can find it. Actually, I'll take my pen. So do you see this point here? So I was never an artist. How it lines up with this point here, right? So we see the market move up. We see the market move back down. We've got a lower point here, but what happened to our RSI? Right? This trend line based on the bottoms. And so if you've got a downward moving market, I use the bottoms of the candles and the bottom of the RSI. In an upward moving market, and we'll show that in a second, I use the top parts, just the opposite. Here, and excuse my artistic skills or lack thereof, we have trend lines moving in opposite directions. Now that's not enough to give, necessarily not enough to give me an indication to buy or sell or to actually buy this contract, right? Rule of thumb, I actually, for confirmation, typically like to see more than, and I'm going to get rid of my drawings here. I like to see 3 points. That's kind of my thing. So let me erase those and go back to my normal mode here. So we'll look at more examples of trendline divergence. One thing I want to show you here, and I'm going to lower this RSI. Is anybody familiar with fibs? Have you ever used Fibonacci ratios? Patterns at all? Okay, so one thing when we talk about chaos theory, when we talk about repeating patterns, right? I'm going to go back to my drawing tools. Oftentimes markets tend to have a rhythm, right? So I'm going to go to my drawing tools. And this is a really simple form of analysis, right? Because markets expand with volatility, contract with lower volatility. But within most cases, while there's chaos, and that's why it's important to be patient, right? You never want to force anything. There was a good book on what's called harmonics. So I'm just going to go to, and I'm going to select my point-to-point drawing tool. Just want to focus here. I'm going to draw just this line here, right? So we had a down move, followed by an up move, And if we look at this, and they're not identical, but they're pretty close. We'll look at a few other examples. Right? In this case, what I might want to do is apply Fibonacci retracement. So you just select Fibonacci retracement. In this case, I'm going to do something. I'm going to put it at this top here, and I'm going to go to the bottom here. One of the key ratios in Fibonacci is 61.8. You see, we had a down move. It went up to 61.8. It started to move back down. It had a lot of velocity, so it actually completed faster and expanded. You'll see that often when they move. Delete the fib. And so you're looking actually at a pattern, a similarity of lines, right? Pretty close. Now in volatility, it won't always hold true. These patterns will break. If I look at the fib, and I do this, do I see anything else from the bottom? Oops, sorry. Nope, it went just beyond the 100%. So I may say, this by the way would be a reverse, what I would call a reverse Gartley pattern, right? But we had this move down. Oops. Sorry, it's not allowing me to grab my line. We had this move down, followed by this move up at a fib retracement of 61.8. By the way, a lot of times when we get volatile markets, they'll go to like 76.4. This is called an ABCD pattern. And when we looked at to complete, now then, we would also look to the RSI as confirmation, right? This is a longer term move. Or not a longer term move, this is on a 15-minute chart, but right? So if we see a pattern that corresponds with fib ratios, and this, we may have a signal to buy or sell. I'm going to slide to a little bit more recent times here. See if we see anything else. Let me slide this out of the way for a moment. Okay, so here's an interesting pattern. And once you start studying these, your eyes will kind of gravitate towards them. So I'm going to go back to my point-to-point line. Right? Oop. Told you I was on not my normal setup. And I'm just going to draw a point-to-point line here. Bring that down. We duplicate this line. I want to duplicate it. I don't want to draw it again. I'm going to go to this low point and just see. So here we have what completed and effectively same move. We had a little bit more volatility in here, but at the end of the day, the time frame was the same. Also, let me do something here. Let me get my horizontal line. We also had another pattern, right? So if we look at those peaks right there, top of this candle here. So we had a double topping pattern. So we had a convergence of patterns, suggesting that we may have a sell pattern, okay? Let me pull up fibs here real quick. I know that this is 100%, right? Because this move down has to be equal to this because they're virtually the same. And they may be off by a point or two. I just want to see if fib ratios line up on this. By the way, this is all from this week. So these aren't charts that I pulled from 2008 to see. So, oh yes, here we have 76.4% fib retracement. Let's just pull up our RSI, see if we have anything on there. Pull that up a little bit too high. Didn't see anything really there, right? We had the RSI about the same level. So just on this move alone, we really wouldn't have had a good indication about the down move. But we've got, let's see, we're going to check fib retracement again. What was the retracement from this move up, right? Did it hit any key levels? Oh, goodness. If we look at there, right? We had this move down, 76.4 up, this move down, 76.4. If I want to see what the extension was on the down move, right there, we're at about the 127.2%, right? So we're starting to have pattern convergence. All right, so let's take another look here. right? Oh, by the way, you know what? I'm just going to do another point to point. Off on the time frame a little bit, and remember, if it completes faster, it may slide below. Are you starting to see kind of a rhythm in what's going on here, right? These are the most chaotic markets the world has ever seen. Let's see if we get it again, right, from a height state. It kind of broke through, right? We broke through that previous ceiling, came up here. Let's take a look at something else, though. And then we're going to move into the shorter time frame, because there's one I want to show you here and how we'd use the shorter time frame charts. Okay, we had, and I'm just going to move this line here, right? See how all these points were coming across? We had a high here. Let me go back to my drawing tools. Right? We had a high, we had a couple of highs here, sticking across, right? So it's staying pretty level. At the same time, our RSI is dropping, right, at these points. So we're getting, maybe we say, trend line divergence, right? We have a flat trend line followed by a downward sloping trend line, right? Does that? Now again, I said I'm not going to give you all the answers. What I want to do is show you like some different ways to look at the market and to analyze it. All right, so let's move here. So, right, we had this down move, which basically equaled this down move, this up move, which equaled this up move. This up move extended both in time and price a little bit longer. What I want to zoom in on is this morning, we had something like this. So we completed a bit faster, right? But we're coming down into this. Now, if I'm looking at placing a shorter term trade, I'm going to move to my 5 minutes. So I had pretty equal drops down here. So ignore this because we're actually looking at like right in where I'm going to focus is what I was looking at this morning, which is right in here. So let's go to our 5 minute chart. All right. So I left click. I'm going to go to my interval. 5 minute chart. By the way, I didn't really have anything too strong here. One thing I'll point out is if you notice, we had this point down here, followed by this point. It might be a little small on your screen, followed by this point. Then another lower low, but we actually had slight trend line divergence up. Okay, maybe not a strong enough indication to place a trade. So let's shoot down to our 5 minute level. All right. So what we had here, and I'm just going to pull up the fibs again. So what we had here was this move up, right, to the tops. So we're looking at this point right here. So what is that ratio? 76.4%? Does that sound familiar? Right? One of the key points. Now you want to have confirmation. I know a lot of people say fibs don't work. You know what? They don't work on their own. I'll say that. I mean, you can go back and find historical. This was actually one I was looking at this morning and thought, well, this makes a really interesting setup. So, right, we had a bit of a pattern. We had, if you remember on the 15-minute chart, we had a similar slope down. This extended a little bit farther. We came down to this key ratio. What else was going on at that time? So I'm just going to remove this line, right? So we've got this down move. Go back to the drawing tools here. Right, we had this move. That was kind of a low point before it bounced up. Got the RSI around 25. At another low point. Got the RSI down here around 27.5. Have our next move down here, along with our fib ratio, along with a pretty close harmonic move, meaning the same tenor of the previous ones. At the same time, we've got downward sloping trend line, upward sloping trend line. Sorry, my lines aren't great. I kind of dipped there a little bit. hopefully you get the gist. So now we've got what's called convergence, right? We had a 15-minute chart that we analyzed, and we looked like, hey, there could be a setup here. We went down to the 5-minute, threw our Fibonacci lines out there, and I'll bring those back up so we can see it. I'll zoom out a bit. If I can find my cursor on this small screen. All right. Oh, I moved my chart, so my drawing tools. No, pretend it's still there. All right. Fibonacci up. 74.74. Here's actually where that trend line was on the 5-minute, right up here. So now we've got convergence. So now another key concept. Let me erase these drawing tools. Here. All right. So hopefully this is making sense. One, on how you can use the platform from an analysis perspective, but also some things that hopefully you find a little bit interesting to do that. Now let's talk about a trade and execution, because this is one of the biggest mistakes I see people at Nadex making, particularly in binary options, but actually in a lot of our contracts, right? Because we talk about defined risk, binary options at expiration are all or nothing, right? Don't be afraid to take profit. And if you're wrong, get out. Right? We just looked at several examples of the same concept over a very short period of time. Right? So even in chaos, you can find patterns. So let's say that I got into a trade. Let me go back to my and let's say that we got into a trade right here. Now, one of the concepts, this is on a 5-minute chart. Let me scroll there. I'm gonna get the RSI out of the way because I want to focus on the chart right here. And then I'll bring my pen back. Sorry, the pen on the chart. If you do draw on the charts, it'll stay there. I'm using the actual presentation software to do that. So I'm going to go back to the pen here. Expand this a little bit. Now, so this first red candle was where we actually hit. I often wouldn't trade on that first candle, right? A lot of times it's beneficial to wait for a confirmation candle or even two, right? Now, if you're trading on a 5-minute binary, it's going to be tough to do if you're using a 5-minute chart, right? You might want to use a 1-minute or shorter chart. Even then, it's probably going to be tough just because they move so fast. You want to have these key levels picked out ahead of time, right? Also in this volatility, right? Probably, not the best time to be buying a binary at 90 when you're putting up 90 to maybe make $10 only because it can change so fast. So we're looking at this area right down in here. We had this green, it's basically a dogi candle, which can signal a reversal. I'm not going to get into candlesticks here. We've actually got some awesome content coming out on the Education Center. Very happy for that to be released because it talks some candlestick analysis as well. And candlesticks basically take these patterns, and in one candle or a series of candles, you can get a great indication. But let's just say that we bought a contract here. Let's say it's a binary option that's expiring at the end of the day. Let's say we bought that at, we'll just say we bought it at a 30, all right? Yeah, I can't draw, sue me. If we buy that binary at 30 and the market goes tick, 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 right? But we still have a lot of time. If we were wrong, if our analysis didn't hold up, this is another thing that a great mentor of mine said one time. The only difference between him and a newer trader was that he got out of his losers faster, right? So here's a big mistake that I see all the time. Just because it has defined risk doesn't mean you have to let it go to the bottom, or if you're selling, to the top, right? So let's say this binary over the next 5 minutes instead of moving, or up the next 15 minutes instead of moving up, had moved down. Maybe now I close out of that binary and I have to close out at, we'll say, a 17, right? I took a 13-point hit, but I didn't lose everything. And you know what? Even if the market reverses after that, I don't care, because if I do something like this, if I take my risk off, when I think the market's proven me wrong, hey, I'm going to be fine then, right? No guarantees I'll be successful, but and this is for any market you're trading. I can't stress this enough. When you're using this type of analysis, get out. Now here we see though the market, if we would have cooperated with us, right? It went up. We actually had a pretty big move. Maybe the binary now is sitting at, we'll say, 65, right? I'm just making these numbers up. I don't recall what it was at that time. Hypothetical binary. Let's say it's at 65, right? And all of a sudden the market starts ticking down against us, right? So many times somebody buys at 30, I see it go up to like 65 or even 95, and they won't get out of the trade, right? Here's what's bad about that. And here's why it's great if you're trading multiple contracts, right? Let's say you're trading 3 contracts, you could take 2 off at 65 and let 1 go and see if it goes to 100, right? But if it starts moving against you, and let's say now we're down here, and now this binary is back at 45, right? We're still quite a bit higher. More time has eroded. If our strike was up here, our strike is up here. Maybe we're sitting at 45, just below the strike, where we could get out at 45, right? Why not do that? The market started to turn against us. Let's lock in some profit. Don't wait for it to go to 0, right? Because right now, if this is our strike, we're probably trading, if down here, where we had these dots, was a 17, now it's probably a 12 because we've lost so much time value. And I've been talking a lot. Hopefully this makes sense though, right? Particularly in these markets because they move so fast. I'm a firm believer, right? One, of keeping as low a risk as possible, right? While having good upside opportunity, right? I don't want to put up big risk to make a little bit in these volatile markets, right? We've got to shift. I might do that in a calm market or a normal market, things like premium collection, but I don't want to do that in a really volatile market, right? Because I think I can get those big moves, right? So, but along with that is I can't always count on those big moves always being as big as I expect. So if I get them and they happen quick, we've all seen that, they happen quick. So, right, make sure you have a limit order set out there, right? If you choose your target, make sure you've got a limit order out there. You know what? And let's just take a look. I'm going to erase these drawing tools. I'm just going to see, we're getting late in the day. You know what? And I've actually talked almost my entire time here. Switch back to my cursor. Hopefully this has been, if not totally confusing, a little bit useful on how markets can move, even in the most chaotic, as we've seen lately, even in the most chaotic of markets. But here's a good example, and by the way, this is not an indication. We were just looking at this move, and then we moved back down. If you look at what the RSI did here, right? This was the low point. We first had this, which were up like this. Now we have this to a lower point, which then bounced up and went like this. Now keep in mind, and it's also important to just step out of the markets at times because we've got what's called triple witching Friday going on, where futures options, stock options all expire on the same day, right? I also want to give another example here, right? Because we had another shorter term example right here, right? We saw this matches with this point, this matches with this point, trendline divergence, moved back up, not a lot. Now you might say, hey Dan, look at this right here. We're dropping down, but this is over that. That's trendline divergence. No, we'd want to wait and see before it gets below this point, right? We might want to see it down here with RSI still up above it to call it trendline divergence. So I want to make sure, because as I was watching the market move here, I could see easy conversion because you're saying, oh, the market's dropping, but this is going up. Now, the next point has to be lower, and this has to be up, right? Another one on the top side we already looked at, trend line up flat across, dropping, trend line convergence, or divergence, excuse me. Alrighty, we've got about 10 minutes here. Happy to take happy to take a few questions. Also, was this helpful for anybody? Did this make sense? Or by the way, it shouldn't make sense at this point. Remember, I'm gonna say them again, so make sure you take notes. Multi-time frame analysis, trendline divergence, Fibonacci ratios. You can throw in RSI in there. That's just what I use for trendline divergence. You could literally spend the next 5 years studying these things. Seriously. I think it's a fantastic study. It's one of the ways you can use the Nadex platforms to analyze. Now, this wasn't overly complicated analysis. It might seem like it at first. I remember when I first started trading this, my girlfriend at the time, I was working at this Forex firm, and I'd spend about 10 hours a day at the office staring at charts, looking at charts. That was my job. I'd been trading for a few years. I loved them. They were a giant puzzle I could never solve, right? And I would get home at night, and we'd eat dinner, and then I would pop open my computer, and I'd start studying charts again. Really important when you're working on a new methodology, continue to study. You can study it for life. I'm still learning things about this. When I first started using it, it was terrible, quite frankly, because you kind of learn the rhythm and the feel of the market, but never force it, right? That's the key thing. But these are just a few of the tools you can use. If you've got other indicators you use, right? If you're on the platform, you go over here. I mean, a whole list of indicators, customizable. The drawing tools I showed quite a bit. But hey, happy to take any other questions. Hopefully not everybody's asleep. One other thing I'll say also, right in here is, as far as like subject matter, things you want to see in these webinars. Yes, this will be this has been recorded. It should be. We're kind of all hands on deck still today, so I'm not sure how soon we'll get it out. It might not be till over the weekend or even Monday, because obviously after a week like this, it will be recorded. We will make sure you get a copy of it for that. One thing I want to shout out to actually all of my teammates here at Nadex. I wish everybody in the world could see what I saw this week. In all sincerity, I mean, they have been on calls at every level. Everybody from are the people who are on the phones that you guys talk to that provide awesome service, our operations group, our compliance group, literally around the clock. Most of us are running on fumes at this point. We want to thank you as well, for being here with us, for giving us the questions. I encourage you to continue to ask questions. Tell us what you need from us, and we're here to help. But I really want to throw a big shout out to my Nadex team members. I wish everybody could see what goes on behind the scenes, because it was truly a Herculean effort this week. So shout out to them. So let's see. So let me clarify, Nelson. So the question is, do I use Nadex to trade Forex and options? I am prohibited from trading Nadex. I trade other markets. The reason I'm prohibited, and all employees are prohibited as they should be from trading Nadex, the same principles I teach can be applied to Nadex. But our number one job is to keep a fair, unbiased marketplace. It wouldn't be very good, and I couldn't say I was unbiased if I was trading against our other members, right? So we're not allowed to trade Nadex. I am biased in one way, in the fact that I think, particularly for these markets, Nadex is awesome. The reason being, going back to that defined risk, you can do it with the low capital, low barrier to entry. I mean, all of Nadex contracts are options. Our Forex markets are very popular. What I would say, though, is, you know what? You've got to try it out for yourself. You can get a demo account, from our homepage. And you know what? Actually, I'm going to flip to. Oh wait, I'll have to go to the other screen. Give me 1 second. Oh, here's our contact numbers. So make sure you have those handy. One of the things that I've always liked about patterns is they really work in any market, but I'm obviously a big proponent of Nadex. I have even since before I got to Nadex, which was a long, long time ago. Let's see. I did have somebody ask me earlier today if they thought this was the bottom of the market. I don't know. You know, there's so much uncertainty. I'm not even going to take a guess at that. And you know, and this is the thing. There's so much uncertainty in the market. I really think, as far as you know, I'm also biased to short-term trading. I have my investments and whatever. Don't get me wrong. I think that's very important. But I know a lot of people are actually sitting on cash right now, and they want to do something with that cash. It should only be risk capital, but that's why I'm a big proponent of short-term trading, getting in on the markets, understanding your risk is very, that, what I showed you today as far as how I analyze markets and when I look for trade opportunities, right? That is nothing. That is a failing system unless there's risk management involved. Unless there's that concept, and everybody can ingrain that concept and have the discipline. If you're wrong, get out of the losers. And when you're right, you can take profit. There's nothing wrong with taking profit, right? If you're in profit and it starts to move against you, guess what? You might want to consider getting out. Don't give all your profit back. I see that way too many times. People buying and waiting for it to go to 100 or selling and waiting for it to go to a 0. There's a lot of opportunity. You know what? And never be afraid to pass up a trade. Don't force it. You know, patience is a virtue. It really is. It's a necessity actually in trading. And with that, it looks like you know, we're running short on time here. I want to thank you all for joining us. Hopefully you found this helpful. Maybe a bit confusing, but you know, if you take those key concepts, keep them simple. You know, do little point-to-point lines. Look at how the markets move, right? Just like an ocean that moves in waves. Pretty simple. At times, you know, there'll be changing weather patterns which make the waves bigger or smaller, but they typically tend to follow a type of pattern. Even in the most chaotic markets, there are patterns. It goes back to physics in that respect. So with that, I want to thank you all for joining me today. I hope everybody has a great weekend. Most of all, you know, I wish you all happiness and health. Everybody stay safe. Clearly everybody's aware we've all been glued to the news as much as possible, into the markets. But really, you know, take care of your health, take care of each other. Super important, particularly in these times. Really just hope everybody has a great weekend, and really wish you all the best in these uncertain times. They will become certain at some point. All right, we will get through this. When, where, you know, what time frame, that's still yet to be determined. There's a lot to sort out. But you know, in all sincerity, we do wish everyone the best, and we want you to stay safe first and foremost. All right, thank you very much.